What's going on, Warren?
It is a good day so far. How about with you?
It's going great.
Excellent.
Huh.
I'm a minute or two early, but
That's all right. How was your trip back?
it very good, very uneventful. Everything went just like it's supposed to. It's with as close as I am, I spend more time waiting on airplanes than I do getting in them, but it was really good.
Fantastic. That's good. I'm really glad you guys got to come out.
It was a blessing to be there. I appreciate you doing that.
What was your favorite part?
You know, I really liked listening to the speakers. I like what his presentation was really, really good. My favorite part still was the networking, just hanging out and being able to meet and visit with people. You can only do what you can do in introducing yourself and talking to people, but it was really pleasant.
That's great. How's it going, Baron?
Good. How you guys doing?
Doing great. Doing great.
Excellent.
Did you know a tornado went through my neighborhood? Did I tell you that, Baron?
No, when?
Last week.
I'm not kidding.
Yeah.
Any damage?
My truck's all dinged up. Yeah. But
That's
there's
probably hail, right?
It was crazy. So we out of all of Colorado, there hasn't been a tornado in 50 years. And it just happened. The tornado happened to go down my street. 110-mile-an-hour winds.
Holy smokes! I'm so sorry. That's Texas kind of weather. You need to move.
Well, I'd like to move to Texas.
You're welcome.
But yeah, so there's about 20 trees within a quarter-mile radius that were just uprooted. Big trees.
Holy smokes! Yeah. I talked to Erin while I was in Algeria for her fund, and she was getting baseball-sized hail probably the same night that you were getting that tornado.
Yeah, absolutely.
That's nasty.
Absolutely wild. Yeah, so the estimator's coming out tomorrow, and we'll see how it goes.
Any damage to your roof or to the house other than your truck being dinged up?
No, we came out okay, but we were outside. We saw the wind turn.
Ooh.
Mute.
Nice sound effect.
Mute. Sorry, everybody, muting. All right. Yeah, we were outside. We saw the wind turn. The hairs on my arm went up, and I was like, okay, grab the baby, grab the dog, grab some snacks, go to the basement.
The snacks are important.
Snacks are important. Oh man! All right.
We did the same thing.
Awesome. Well, yeah, we got a good group of 17 in here so far. That's awesome.
Terrific.
Let me get organized. Sweet. Well, awesome. Everybody, thanks for hopping on. Let's get after it. So first disclaimer, this is not, financial or legal advice. It's intended to be educational. Typically on these calls, we're having expert SEC attorneys come on board. We're talking about really important topics such as broker-dealer laws, how to raise capital, licenses you need, what's a PPM, international investors, different bodies of regulation. We're doing these calls every Tuesday, 1 p.m. Eastern time. However, today I wanted to switch up the call a bit because, I see a lot of great folks. They have great ideas. They have a track record, but, a lot of you guys want to go raise some serious capital. And then, from my perspective, I think some of those capital raise targets just lacking a little bit of strategy and the team to go really execute properly. And so, my goal with these calls is just to add as much value to this community as possible, which is why I'm absolutely honored to bring on Baron Lukas today. He has over 42 years of combined leadership experience He's a former fighter pilot, intelligence officer, business executive, board member, and is an absolute expert when it comes to strategy and execution. So, Barry, let me set the stage for you. This group we're in is truly an honor to be a part of this group. It's a mastermind filled with entrepreneurs, business owners, emerging fund managers. There's, I don't know, Warren, would you say about 800 of us or so, roughly? I don't know. There's quite a few of us, but everybody pays about 30 grand to join. And it's just an amazing community full of go-getters, and quite a few of them have become great friends. So all these folks, they want to take their business to the next level. So there's people in here that want to raise 5 million, 20 million, 50 million, 200 million, you know, all across the board. So
superb.
Want to set the stage. So thanks for coming on.
Yeah, my pleasure. Thanks for having me.
Yep. So, Barrett, you know, you have quite you have a terrific background with different you know, leadership and management and board member, you know, status. You know, well, you're doing so much stuff. Just first question, you know, how does your military background affect the way you approach developing a strategy for business?
Yeah, thanks for that, Ryan. When I left the Marine Corps after about 30 years, I became an investment banker, which was like coming out of the pan into the fire. I had no idea what I was doing in business. All I knew how to do was command Marines and fly airplanes. But what I learned was that the military planning process, which is a continuous assumption-based process, and I can explain that a bit more detail, was different than what I saw in companies that the investment bank was trying to buy or in their portfolio companies, which was basically try to marry some sort of financial plan with some sort of an overview for the next year, 3-day offsite, and then the books are closed, it's on the shelf, and then execution happens, and with very little regard to what the plan was. And unfortunately, that is the norm. And so what I did over the years, I went from investment banker to running a portfolio company and then starting to consult in 2014, was I took the military continuous planning process and I fairy dusted what I learned to that date, almost 10 years in business, and some of the things that there were the thought of the day. I think Scale Up or EOS and some other systems out there that had some value. And so what I did was I took a look at how the business should be planned, and what I do and what I do for my clients, what I've done for companies that I've run over the last couple of years, is we start from scratch. We take a foundation of the business, who that business is, describing it for what it does, the why of the business. Besides making money, there needs to be some other reason for doing what you're doing, I think. And working through that into not understanding the culture that you're trying to create, the core values you're trying to portray. I think you can be successful in business only if you have good intention, because if you don't, eventually they'll catch you and you'll fizzle away. And that underpinning is how you hire, how you organize the organization. We go from that, and then we take a look at the strengths, weaknesses, threats, and opportunities that your business has, identify the lines of business strategically, and then it's assumption-based. And by that, I mean, we need to understand what we know, what we don't know, and what we have to assume to continue planning. That's what we do in the military. And that understanding what you have to assume to continue planning is critical. Then, once you've got that and you understand any shortfalls you have and any risks that you have to contend with, then you can start developing a strategy for whatever you're going to do, whether it's raising a fund, whether it's running a railroad company, whether it's running an oil supply house. It doesn't matter. It doesn't matter what industry it is. You have to get that done. And what I do, and if you remember a couple of years ago when we met, what we were trying to do that time was take a look at a 5-year vision for the company. And the reason I use 5 years is anything further than 5 years, I can't see that far. And even now, with the volatility that we have internationally and domestically, politically, and economically, 5 years is a pretty long stretch. but I want at least to have something, a target out there, a vision for what we're trying to achieve in the program. Then we step back a little bit and we really look at a 3-year target financially, what the company or the fund looks like, what are we trying to achieve, what the ROI is, and then go back to a 1-year plan. And then we do some detailed planning for that first year. And we break it out into quarters and into months. Then, and here's the secret that 99.9% of the companies that I've seen so far don't do. We do this on a weekly, monthly, and quarterly basis. That's why it's continuous. So you build a plan, you have a plan for the next 12 months. Obviously, financials are involved, forecasting is involved, some budgeting is involved, capital requirements are identified. But then you validate your assumptions and your target goals for monthly and quarterly requirements on a weekly basis. Then on a monthly cycle, you update and review the plan with your team. That could take a day every month. Now, it's a commitment for most companies to do that, but if you don't do it, what happens again is you have a plan on shelf, nobody uses it. And then on a quarterly basis, we take a no-kidding full day and we review the plan and we step back from the plan and say, okay, what's changed? What conditions have changed from, I thought I was going to raise $200 million for X fund in this case, and some financial condition has changed. Perhaps the need for the service or the product, the way we're trying to do has differed. Economic conditions have changed. And then we take a look at the changes and we look at what we thought we knew, what we didn't know, and what assumptions we've made, what shortfalls we've identified, and what risks we've identified, and we recast a plan on a quarterly basis. And that goes continuous. We even go as far as doing, and Ryan, you were a victim of this a couple of years ago, a morning huddle for the leadership team, making sure we understand what the priorities are for that day, what needs we have in terms of concerns or issues, what help we need. That galvanizes the plan. So you go from big to small, right? 5-year vision, 3-year target, 1-year plan, a quarterly review, a monthly update, a weekly leadership team meeting, and a morning huddle in the morning. And now you've got an execution process. You have a planning process, an execution process that makes the thing run in a disciplined, organized fashion. And I've seen it work time and time again.
Wow, incredible, Barrett. Can you elaborate on some of the projects you got going on? Like, what can you talk about maybe your recent trip overseas and what you're doing with that company?
Yeah, sure. First of all, I've got 2 of your Padawans that are trying to raise some money. So I'm helping 2 folks organize their fundraising efforts and getting the team organized. Think of me as a chief of staff, if you will, kind of running the interference for the owner visionary and helping them organize themselves. So that's one of the things I do. And I've got 2 of those clients. I have another client that is a railroad construction company that is part of an international consortium that has probably a 90% chance of receiving some very large, multi-hundred billion dollar contracts in North Africa for everything from railroad construction to renewable energy to electrification and on and on and on. And what I'm doing there is exactly the same thing I just outlined. I'm helping the consortium plan for what's ahead. I just spent 2 weeks in lovely Algeria. Great place. I wouldn't want to vacation there, by the way, but it's still a pretty nice place. And there is other countries like Angola and Kenya in our future. So that's another thing. What I do mostly is, and I've done this now for the last 2 years with ExecHQ, to help companies get ready for an exit or capital raise. And that's another one of the things where it's a misunderstood discussion that people who are trying to exit out of a business, the old saying is you should never start anything without the end in mind. And while that's easily said and certainly makes sense, nobody does it. And so from about 30 investment banks that we're partnering with, only about 30% of their clients actually make it through a successful exit. The rest either get turned away. And what happens there is, Ryan has a business he's trying to sell, and he goes to Warren, and Warren is the investment banker, and Warren goes, Ryan, you got a great business, 10 million EBITDA, blah, 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 but XYZ, you're wearing 10 hats, you're not a leadership team, you have no planning process, you've got too much customer density. And then when Warren says no, I can't sell you right now. Ryan goes to someplace else, and that guy may sell you. So what we do is we intervene. Warren sends you to me and my team at ExecHQ, and we do however long it takes, anywhere from 9 to 24 months, get the company ready to sell, get the multiple to where it needs to be, maybe even be positioned in another industry. And we've had great success doing that. The other thing is that I do a lot of executive coaching, and I run the corporate governance practice for ExecHQ. So building both fiduciary and advisory boards. And then there's another, and there's no old folks on the call. It's not my color here, but there's a bunch of us that are in the past 60 stage looking to retire. And so there's a huge amount of wealth managers looking for help, for business owners trying to exit. So same thing, it's increasing the multiple and getting rid of the exit. So all those are kind of a mix of things that I do with ExecHQ and move on.
Yeah, Baron, could you elaborate a little bit more on what ExecHQ is?
Sure. Long story short, it all started with somebody that left a fractional CFO company and build a company that is the entire C-suite. So we have everything from think CEO, board member like me, down to whatever the lowest alphabet soup letter is in the C-suite. There's 120 of us at last count, North America, Canada, Mexico, UK. We even have one in Taiwan. And literally it's everything. So one of the things that is interesting for this group, particularly, if you're looking to strengthen your leadership team, strengthen the management team, need a strategic CFO, need a chief marketing officer or a chief IT officer, even a COO, and money is a little tight in the beginning in most funds, you can get that fractionally via ExecHQ. And so what we've done, give an example, I had a company that just sold where we employed 7 ExecHQ principals in various C-suite positions in preparation for an exit. It's the same thing as preparation for growth. It just strengthening the bench strength on an interim basis where the cost is significantly lower than it would be if you're hiring somebody for real.
Could you elaborate on some of the core values that you believe are critical for effective leadership?
Yeah, absolutely. Everybody has their own core values. Now, mine are maybe stereotypically what the Marine Corps taught me a long time ago, and it's honor, courage, commitment. And we can talk about what that really means. But I think if you think of integrity and honesty and doing the right thing, courage is critical. And I don't mean physical courage, getting shot at and not running away, but the moral courage of doing the right thing. Understanding when to fire, understanding who to hire, those kind of things. And then commitment is just making sure you get a good work ethic. That's the underpinning. And whatever you have on your own, decide on your own. Whatever speaks to you, whatever makes sense for you. But there's a leadership model that I think has great value, and that is this. If you think of a triangle, a leadership triangle, on the top of the triangle is character. That's the first thing you're going to have as a leader. And you can say that there are lots of leaders without character. You know, Vladimir Putin, maybe one of them, right? He has a character, but it's a bad one. And those kind of guys always fail. But if you don't have character at the top, the house of cards starts to tumble. Next thing on the one side of the triangle is competence. I don't care how much character you have, how smart you are. If you don't know what the hell you're doing, you're probably in the wrong seat, and you need to find somebody that has potential. And I always think that while I had a great time being a fighter pilot and all that, I'm never the smartest guy in the room if I can help it. I'd much rather hire the right kind of guys, but I need to be competent to at least know that. And lastly, and here's one that's really critical, and I've seen this fail time and time again, and that is composure. Not losing your cool under pressure. Not getting upset, not getting either violent or hysterical or crying. The leader can't do that. And now we're all human and we all have ups and downs, but keep the composure as best you can. And if you combine real core values with that leadership triangle, you really can't go wrong.
Thanks, Barrett. So somebody just messaged me, and they said they asked this question: Do the fractional CFOs or the company specifically help with people raising capital?
We do have folks that have done that. Yes, we do have folks that have done that. And the best I can say is this: go to the ExecHQ.com website and just take a look around. And then if you need, you want somebody to kind of vet some folks for you, or give you a lineup to interview, you're welcome to drop me a line. It's pretty simple. It's Baron.Lukas, Lukas. I'm a foreigner, but I came illegally, I promise, at ExecHQ.com. And I'll be happy to have a Zoom meeting with you to discuss your needs, and I'll find somebody that makes sense for you.
Yeah, guys, I'll post the contact information and the website on the Slack channel afterwards. And thanks. Do you guys have any questions for Baron? No, Warren, do you have any questions? Zavu, do you have any questions? No. Okay.
Wow.
Baron, do you have any examples of successes with companies that you've worked with that you could share?
Yeah. Oh, absolutely. The company that's maybe embarking on an international trip went from, and this is not my doing, it's just getting organized as a company. They went from 8 million in revenue the first year. When I joined them, then after the first year they were at 18, that they'll be at 35 million this year, and next year, assuming they actually do the North African deal, it will be a multi-$100 million revenue company with significant growth potential thereafter, and obviously a potential exit. There have been a number of companies that have grown significantly, although that one is my bright shining example. On an exit, we went from not being able to exit at all to the company, and literally the owner spent $700,000 but got 15 million in return on exit. So that's not a bad return for the business.
That's awesome. All right. Well, I've asked all my key questions. Michael, go ahead, man.
Yeah. Hey, thank you, Baron. Appreciate some of the insights here. One of my questions is when you think about the tools of planning a capital raise, which is the context that we're all operating in here, are you a fan of like a Gantt chart, trying to plan that out, or kind of talk about some of the tools that you would use in that planning and execution?
Yeah, that's a great question. Thanks, Michael. Appreciate that. And I've been with my two clients now for 2 months on one side and 3 on the other, and so we're both parties are about to start pitching here in the next 30 or 45 days, and it starts with kind of figuring out what it is that they really want to do, and it goes beyond, why am I raising the capital and what am I going to do with it? It goes through, okay, what are their personal desires and wants, looking at what the team requirements are. And so again, think of that chief of staff role of organizing the thoughts. And what I do with all those clients is do a rudimentary 5-3-1 plan, 5-year vision, 3-year target, 1-year plan. Look at what is the exit desires, because eventually you're going to have to turn this thing around or start another fund or leave, and really understand what that looks like. If you don't solve the end in mind, that gets difficult. And then to your point, Michael, what I've done is map out on a quarterly, monthly basis, what are the required steps to get this done, right? And what are the goals for each month? So it's everything from, do we have a teaser? Do we have a pitch deck? Do we have the legal documentation required? Is the fund structured correctly by what time? And then I help folks interview people for key positions, because a lot of folks have not done that. I can't tell you how many thousands of resumes I've read and how many interviews I've been a part of. And so I help in that regard. And then once the team is in place and we've got everything set, then it's an orderly timeline, recognizing who to pitch to and why. I think everybody here that's raised money before has had a difficult investor. How's that? And having been a victim of difficult investments or investors, I understand how that might work. And understanding when to say no, when the money isn't worth it because the headache or the values of the other party are not aligned. And that's why understanding what culture your little fund has and what kind of personality you're trying to portray to the outside world is critical. So I use MS project management software and map out what the requirements are, what the timing is, and then here's the critical part. And maybe it's because I spent so many years in the military where accountability is kind of key. You're getting shot at, but holding them accountable. Having a good monthly, weekly meeting, and even every day meeting to, okay, this was the plan for this week. Are we on plan? Are we off plan? If we're off plan, why? And holding the team accountable to move forward. When do we want to raise capital? When are soft commitments? When are hard commitments? What are we going to do? And getting that organized in an orderly, logical, doable fashion. A lot of folks, whether it's fundraising for a fund or fundraising for an existing business, set lofty goals without a viable plan. And then when they fall short, they cave in because they haven't met their goal. Well, start with the right kind of goals in mind and then hold each other accountable, and you'll probably do much better. I hope that answers your question.
I remember our morning calls at 6 a.m.
Baron, I have a question. What kind of KPIs or accountability type of indicators would you put in place for capital raising type of plan? For a lot of the people here are, beginning capital raising or have a need to raise a bunch of capital for their fund. That's kind of a big thing. So what kind of KPIs would you put in place to actually create that accountability?
It's a good question. I think it depends on the fund. And it depends on what you're raising the funds for and what stage you are in the fundraising. So the KPIs for all that, right? Obviously, there's KPIs for financial performance. There should be KPIs for just pitching, getting that schedule, getting in front of people and making sure there's enough time for them to say yes or no, and laying out, for every 5 pitches, how many soft commitments are you getting? If the fund has an operational goal, and one of the folks that I'm working with is going to be involved in low cost, refurbished, good housing for veterans that have had difficulty integrating into civilian world. And I think everybody knows that we're losing about 40 veterans a day now to suicide. So I would say that has an extraordinary altruistic goal, but there also has to be what houses, what apartments, who's going to do all of the reconstruction, how are we going to identify possible renters, and all that needs to be mapped out. And to your point, there has to be KPIs associated with that are checked on a weekly basis to make sure that we're not falling off track someplace. So that's probably a very loose answer to a very specific question, but the answer really is, and as you will know, Warren, it depends what stage you're in and what you're trying to do. Just make sure that you have key performance indicators that work for your situation at that time and are aligned with the 5-3-1 planning process.
Questions? I'm going to give time back.
I'm sorry, I missed that. No worries. Warren, does that answer your question?
Yes, that makes sense. As long as the people are doing the actual things that need to be done, then the funds will be raised. Obviously, if you're doing outgoing calls, incoming calls, number of pitches, those kind of things all allow you to be able to make sure everybody's doing what they said they're going to do. So that makes sense. Thank you.
Yeah, you bet. And the other thing about that I think is, and it's obvious, I think, but it needs to be said. You better make really damn sure that your plan for using the funds will provide the right kind of return on your investment. and understanding the volatility of whatever marketplace you're in, and setting the right kind of expectations for the investors, I think is critical. Obvious needs to be said.
So how's it going, Byron? This is Vu. So it's good to see another
Hi,
Marine.
Vu.
And when you're talking about
All
leadership,
right.
that's my big push too. So I have a logistics and intel background, and I like to kind of show them, but translating it to the civilian world and showing them about the different type of G levels,
Yes,
different officers to be able to build is extremely important. So the question that I kind of have for you, since Ryan kind of told me that you're like the chesty puller, the grand old man of funds, was what would be your first hire, and then what would you hire after that when you're starting a fund, and if you could share that with the community?
Well, that's a great question, and here's, and I'm gonna give you a somewhat nebulous answer, but here's why. And I don't know how many are on this call. I only see what's on the screen. So let's say there are 25 of us, I think, here. There are 25 very talented, intelligent people. At least I hope we are. I have a skill set. I know what my skill set is. And I think what needs to happen is to make sure that the people you hire complement your skill set. So if you are an operator, the first hire I would have is a financial, whether that is fund management, fundraising, or CFO, depends on your specific requirements. But I would find complementary folks. And then it depends on what your fund's going to do. Obviously, you need to first be able to raise the money, but shortly thereafter, the money has to be put to good use. And figuring out what your operational requirements are, what your plan is, and for operating and for utilization of the funds will tell you who to hire when. But certainly, most folks need somebody really quickly, and I'll be self-serving here, that looks a lot like me. I'm not sure about chesty puller, but certainly somebody with a little bit more years on their body than most of the folks on the call that have the experience to be able to organize an organization. And if you don't have that, and whether you call it an executive coach, or whether you call it chief of staff, or you would call it whatever, a strategic advisor, having somebody that can hold you accountable as you're navigating what I know is a very stressful environment to raise funds, I think that's probably the first person I would hire, and have that person help you hire and identify your requirements based on your specific fund.
Well, I guess I'm going to have to ask you if you have your honor, courage, commitment card on your left breast pocket.
I don't have a left breast pocket. I'm afraid not. But I appreciate that.
Thanks for sharing that. I appreciate it.
Yes, sir.
How's it going? Go ahead.
Hi, can you hear me?
Yep.
Okay. Hi. Hello, sir. Thank you for your service. And to Vu also, thank you so much for your service. I do have 2 kids that are in the military who are now veterans, one in the Marine and the Navy. And one is a computer engineer, but I would love for them to really, I was introducing them to get into the fund space. But what steps have you taken to familiarize yourself in the beginning in the fund space, given your background as a retired colonel, and how do you stay updated with the latest trends and developments in the field?
Yeah, that's a great question. Thank you. And thank you for your son's service, or your children's service, daughter or son, doesn't matter. I've been in business now since September 2007. So that's a fair amount of time. And I've been in everything from investment banking to running at the top of a $150 million company, to consulting. I don't know how many dozen companies, from Fortune 100 down to startups. And they all have very similar requirements. So I don't know that I am up on the latest in fundraising, and I wouldn't want myself to be, because I have a lot of clients that are not in the fund business. But if I'll be candid with you, but for the 2 that I have that are in the fundraising business right now, we are semi learning together, and then I find people that have the absolute latest knowledge of fundraising and all the SEC rules and all that. And Ryan is one of those where I ask the right questions. My strength, if I have one, is one, I'm buddy old, and two, I'm able to pardon my language, read through the BS and get to the heart of the matter rather quickly, and then help the person based in the fund, the people based in the fund, organize themselves correctly and to find the right kind of advisors. That's one of the things that I think this group is I mean, it's a fantastic group, people, 800 people, spending a fair amount of money to be here. This is a brain trust group. And so my encouragement to everybody is, and I say the same thing to people that join ExecHQ, because I interview everybody that joins that company, is find a team around you. Nobody does this by themselves. Find a team that complements your strengths and helps your weaknesses. And so in this group, you should be able to find a dozen people or more that you're simpatico with, shared common values, the same kind of outlook on life, and then have the expertise to help you do whatever you're doing. I think that's probably the best bet for you.
Thank you.
You bet.
Another question in the chat was, what does a typical engagement look like with ExecHQ?
Well, the short answer is there's no typical engagement, but let me give you my typical engagement. If I'm going to be an executive coach, mentor type, then it starts with executive coaching, and that's literally understanding strengths and weaknesses, goals, and helping the executive, or in this case, a fundraiser, achieve those goals. Then as we learn from each other and to make sure that we can work with each other, then it's a matter of identifying requirements and expanding the engagement to what's necessary. So I'll give an example, and this is a live example. I've got 2 clients that are raising funds. Starts out with coaching, a little bit of organization, a little bit of understanding of where they are in this journey, what experiences they've had and or not, what team members are already on the team, and then all of my clients get the benefit or the torture. You need to ask Ryan about learning how to plan, going to my 5-2-1 assumption-based planning, and I force the execution. I work for you, but I'm a taskmaster by training and probably by nature, since I'm a German Prussian immigrant. And so I get the job done in that way correctly. Cost of that engagement depends on the low end of coaching and the high end of being a chief of staff or an integral member of a team. Some clients, like the company that's going to go to North Africa, it started out with building a plan, then it went to coaching, and now it's going to chief of staff and helping a consortium, a multi-billion-dollar consortium, plan for this and acting as one of the strategic advisors. For companies that are looking to exit, it starts with an assessment, and then it builds a program to get the company from wherever they are in their multiple value journey to where they need to be to have a successful exit or capital raise. So it just kind of depends. There are a number of us that do interim and fractional work. So for example, let's pick on somebody here. Aaron West down the bottom is raising a fund, is looking for a strategic CFO. Somebody that can be at the 60,000 foot level and actually understanding how to utilize the funds and manage the funds correctly. That would be an interim, maybe a 6-month engagement for one of our CFOs to help that fund out. I mean, once the fund gets going, they may need to have a full-time CFO, but in the short term, they may not need to. Likewise, board work. There's a number of us that have done a lot of either governance, fiduciary boards, or advisory boards, and getting that started. And here's another thing that I think, just kind of a little tidbit. The proper use of an advisory board could help every single person on this call and in this group get themselves in the right track. And it's the exact same theory as having a brain trust, a group of people that you're friends with, that you look up to and guide you. I am going to be 64 at the end of this week. I still have people that I call because they're my brain trust. And frankly, Ryan Werking may not know it yet, but he's one of them, right? I know what I don't know, and I ask the right kind of questions. find an advisory board. They're not that expensive, but get people they're going to help you open doors. One, get you to the right kind of contacts to raise capital, the right kind of people to operate the funds correctly, and probably most importantly, the right kind of people that would tap you on the shoulder and say, hey, that wasn't right. We can't do that. Or maybe you should be going left instead of right. But sometimes, and everybody's been involved in this, you get so wrapped up with what you're doing, you get so passionate about what you're doing that you can't see the forest for the trees. And the right kind of advisory board or the right kind of coach will help you do that.
Thanks, Baron. That's
You bet.
that was awesome. Well, guys, I don't have any more questions. Aaron Hudson, Dr. Aaron, what's up? How are you? Oh, you're muted. But well, guys, if you okay, hold on. One more question. A couple comments. Wayne, this might be useful for a family office. Who's okay, who's great at starting businesses, but needs some help pushing it across the board. Okay, Darren, what would you say would be a price range for an advisory board?
Depends on who the advisory board member is. I mean, I have one client right now that I've asked. She met a lady that could be a role model for her, and the woman that is a potential advisory board member is very high priced in a multi-billion-dollar fund of her own. So I don't think she's going to do it out of the goodness of her heart, and so we may have to wait a little bit until the financial health of the fund is better to invite her. But in my past, I've seen advisory board members go for as little as $1,000 a meeting, which could be monthly or quarterly, and I've seen them go as high as $10,000 a month. And that's just from my experience. It just depends on who you invite and why. Hopefully they find, not out of the goodness of their heart, but there are a lot of folks that enjoy helping younger, not necessarily in age, but in experience folks be successul. And if you just find the right kind of people, it should be relatively inexpensive. But even if you can't get it done right now because you haven't raised the right kind of capital yet, keep them in mind anyway, because when you do, they may join later and offer you much greater doors to raise more funds or have more success operationally.
Follow-up question to that, Baron, is have you seen a situation where one of your team members at ExecHQ retains a percentage of the GP?
Yes. Yeah, we're all mercenaries. We're all 1099 consultants. So we all have our own businesses. Mine is Vital Strategies as a business name. So I have taken part ownership. I have taken success fees on an exit. But normally I work for a monthly retainer and it's based on the value of the proposition. But certainly taking part ownership is always an option.
Awesome. All right, guys. Well, Baron, it's been a pleasure having you come on. Really, really appreciate your time.
Yeah, pleasure's mine. Thank you.
And guys, if I will put his Baron's contact information in the Slack chat. Is it okay to put your email on there?
Absolutely. Yeah. Phone number is as well. I'm available. Just let me know how we met, and so that I can get some context before I answer. But I'm happy to help any way I can.
Awesome. All right. Thank you, Baron. Thanks, everybody.
Thanks, folks. Take care. Have a great week.
All right.
Hey, Baron, let's connect too, because I just noticed that you were part of Meg 41, so I was part of the entire Meg and Mel's. So I ran the entire Lean Six Sigma team. So let's definitely connect.
Absolutely. Love to do that. Thank you much.
Catch you later.
Appreciate it. Take care.
All right.